Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden language of corporate filings so you don't have to. Today, we're diving into CSX Corporation's latest report, and let's just say they've been busy raising money with some interesting note issuances. Stick around to see what it all means for the railroad giant. Alright, let's get straight into it. CSX Corporation, a major player in the American railroad scene, dropped a report on the 23rd of October detailing some significant financial activities. The earliest event they're reporting on happened a few days prior, on the 20th of October. If you are not familiar with CSX, they operate a massive rail network across the eastern United States, moving everything from coal and chemicals to consumer goods. Think of them as the arteries of American commerce. Now, for the legal bread and butter, CSX is incorporated in Virginia and has been a public company for a long time. We see their standard filing information here, but honestly, it is the juicy financial details that really matter. Their principal executive offices are in Jacksonville, Florida, but we're not here for a tour of their headquarters. We're here to understand their financial maneuvers. Their stock is traded on the Nasdaq Stock Market LLC under the ticker symbol CSX. It is pretty straightforward, but now let's get to why this particular report was filed. This report is primarily triggered by the creation of a direct financial obligation. This means the company has taken on some new debt or a similar commitment, and it looks like they've referenced another item for the full story. Which brings us to item 8.01 Other Events. This is where the core news resides. On the 23rd of October, CSX Corporation announced they completed a public offering. They issued $300 million worth of new notes that are due in 2035. These notes carry an interest rate of 5.050%. This isn't entirely new debt for them though. These new notes are an additional offering that will be combined with their existing 5.050% notes, due 2035 that were first issued back in March. That initial issuance was for a much larger $600 million. This whole operation was done under a shelf registration statement. Think of a shelf registration as a pre-approved way for companies to issue more stock or debt over time without having to go through the full approval process each time. CSX's shelf registration was approved back in February of 2025. They also filed an updated prospectus and a prospectus supplement on the 22nd of October. This document is key for investors, laying out all the details about the notes being offered. Now, like any good corporate filing, it ends with a list of exhibits. These are the supporting documents that back up the report's claims. We see here the action taken by the company's authorized pricing officers on the 20th of October. This would have been the formal decision point for pricing these new notes. And this refers back to the form of the debt instrument itself, which they had previously filed. It is standard practice to incorporate previously filed documents by reference. There are also legal opinions from outside counsel Davis Polk and Wardwell LLP and Hunton Andrews Kurth LLP. These opinions essentially confirm that the debt issuance is legal and properly authorized. And then we have the consents from these law firms, confirming they're okay with their opinions being included in this filing. Finally, there is the cover page formatted in a way that computers can easily read and process, which ISIN-line XBRL. This is all about making information more accessible for automated analysis. And the report is signed off by Sean R. Pelkey, who holds the title of Executive Vice President and Chief Financial Officer. This confirms the report's authenticity on behalf of CSX Corporation. So, what is the big picture here? CSX is essentially tapping the debt markets again to finance its operations or perhaps specific projects. They're issuing more of an existing type of note, which suggests a consistent strategy for managing their long-term debt. They raised another $300 million on top of the $600 million they already raised. This shows they are comfortable with their debt levels and the interest rate of 5.050%. This rate is not particularly high in the grand scheme of things, especially considering the long maturity of 2035. This suggests that investors see CSX as a stable company with a reliable stream of cash flow, making them a good bet for long-term lending. It points to a company that is confident in its future earnings to cover these interest payments and eventually repay the principal. We'll have to keep an eye on how they deploy this capital and if it leads to any significant strategic moves or expansions. Now, looking at these results more broadly, CSX appears to be in a strong position to leverage its existing debt structure. Their ability to continue issuing notes at a reasonable rate indicates investor confidence. However, the ongoing reliance on debt financing, while common for infrastructure companies, does represent a consistent risk. The more debt a company carries, the more vulnerable it can be to economic downturns or unexpected operational disruptions that could impact its ability to make payments. The key here will be how this new capital is utilized. If it is for strategic investments in infrastructure that improve efficiency or expand reach, it could be a net positive. If it is simply to cover operational costs or refinance existing debt without a clear long-term growth plan, it warrants closer scrutiny. A reasonable conclusion is that CSX is executing a well-charted financial strategy, leveraging its established creditworthiness. Their move to further fund their 2035 notes is a confirmation of stable operations and investor trust. The main opportunity lies in how effectively they invest this capital for future growth. The primary risk, as with any heavily indebted company, is the potential impact of unforeseen economic headwinds. Alright, that is our breakdown of CSX's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.